Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Welcome back to the show, Ted.
Well, it's great to be back, Jim.
Well, we'll take the Wayback Machine and take a look at late December when you predicted Canada's economy would do much better than so many other people had predicted. And how has Canada's economy done since December 29th when you talked about that?
Well, on last Friday, we got some really good news on GDP that the gross domestic product grown at an annual rate of 4.6%. That's the best since October 2000. So pretty good numbers for the first part of the year. And, much to the surprise of people who are reading the mainstream media, Jim, about how everything was so awful in Canada and how, the inflation rate was low. And at the time you talked about, ignore that. Don't listen to what people say about the inflation rate. Look at what's going on, with insiders, which is what we do. And that was the basis of our outlook. We saw them buying economy sensitive stocks in Canada, retail stocks, resource stocks. So they were betting on the Canadian economy while just about everyone else in the mainstream was throwing in the towel. So that was what triggered our signals, what insiders were saying. We had indications in the resource area, for example, we were going to see an uptick in copper. A fellow named that goes under the Twitter handle of Hedgehog Trader, who writes for us on CanadianInsider.com once in a while. He did a blog also in December on Canadian Insider, and he predicted that copper would move to the upside. Well, it's moved to the upside. Indeed, it has. And in fact, Jeffrey Gunlock, the bond manager who manages the most bond money in the world, maybe aside from the European Central Bank, who's they've been buying a lot of bonds recently. But on a serious note, Gunlock was saying, look, the copper gold ratio has been picking up here, and it has been picking up quite dramatically. And Hedgehog Trader tweeted out a chart today that caught my eye, and it's actually soaring. The copper to gold ratio. Now, what is that? It's how much copper is worth compared to gold. And when it's going up, what it means is that the industrial economy is picking up relative to gold, which is a hedge during times of trouble. So that's a positive sign for the Canadian economy and the Canadian market. When this ratio was falling in 2015, the Canadian market didn't do very well, Jim. The Canadian Insider Index, which we manage, it was down on a total return basis 2%, but the S&P Composite, which people follow broadly here in Canada, even though it's an American-managed index, it was down much more than that. However, in 2013, when that same ratio, when copper was outperforming gold, the Canadian market did very well, with the Canadian Insider Index going up almost 20% on a total return basis in 2013. So it's good to see that it's going in the same direction. Doesn't mean we're going to have the same results, but there are some positive signs that this economic momentum will continue. However, we did see in our rebalancing of our Canadian Insider Index in May, the insiders pulled their horns in a little bit and they hedged their bets because there's just quite a bit of uncertainty political, I think, and policy uncertainty that requires some hedging here going as we go through the summer. Not only do we have an American administration that is unpredictable to say the least, but we've got central banks that are trying to bring some sense of normality back to their interest rate policy. And that, things could go wrong. Now, it doesn't mean they're going to go wrong, but things could certainly go wrong. So hedging's been pretty cheap. You can hedge your portfolio pretty cheaply with options. Volatility is quite low. So that means option prices are generally tend to be quite low, although I think they've picked up on certain stocks in the last few weeks. But, there is a good case for at least hedging part of your exposure here after a good run in the U.S. market. And, there's always a risk that policymakers get it wrong, whether it's the U.S. starting a trade war by some move to take on China, or whether central banks, just do the wrong thing at the wrong time, which, they have done in the past, and they'll probably do it again at some point.
Well, Russia just said it considers the latest sanctions against it by the U.S. to be the start of a trade war. Is there much trade to be warring with Russia? Well,
that's a good question. I mean, after all the sanctions, I'm not sure how much there's left. That we've done our own self-inflicted trade war with Russia, so I wouldn't be too worried about that. It's never good to see those kinds of developments, sanctions and more sanctions, and I don't know where that gets us, but in any event, the real elephant in the room is China steel, which the U.S. president seems to have in his crosshairs. Now he's delaying and delaying and delaying on that, so there must be a lot going on in the background, and the more he delays, the better. But you never know. One Friday afternoon could get some presidential order that upsets the apple cart. So there's those kind of risks. We hope they don't happen, but they could happen. And what we've seen from insiders is that they were a little nervous here in the spring. Now, we've just done our preliminary look at our top 40 for the month of August, and they're getting a little bit more aggressive again, which is good news. They're picking up some of their exposure in the basic materials area and in some of the industrial areas. So I would say things are looking pretty good. They're not as on the economic front, not as clear as they were, I think, 8 months ago when everyone was so depressed about Canada. But we're still waiting for the Canadian market to rebound, and there are some hopeful signs that that's taking place. We're seeing a nice divergence in the past really 2 weeks, just less than 2 weeks, between the Canadian market and the U.S. market. The U.S. market is kind of running out of gas here. We've had such a huge run in the U.S. market, and now leadership is narrowing. So what do I mean by that? Well, stocks like Apple are driving the returns this year, whereas last year was a pretty broadly based rally in the United States. But now it's narrowing, and usually when you get this kind of narrow leadership, it often signals the end of a bull market run. So we'll have to see. Our insider signals in the U.S. are very cautious. Insiders tend to be value buyers, and there's not a lot of value in the U.S. market. There hasn't been a lot of value, and there's even less value now. So at some point, the momentum music is going to stop, and value stocks will come back into fashion. We saw a glimpse of that in the early months, weeks of the Trump administration, but that has fizzled. We'll have to see if events reverse that again, and we start to see value stocks pick up. If we do see that, I think it'll be due to global growth, not U.S. growth. And I think the U.S. market has probably had its run here on a relative basis, and the Canadian market is certainly due for some outperformance. We'll see if the trend lasts. It's only been a week or two. Could be just a noise, still pretty early, but certainly positive indications, especially when you see copper outperforming gold. There's some hopeful signs, but let's just, we have to hold our breath and hope that, we don't get any bad policy moves particularly out of Washington right now.
We'll have more with Ted Dixon right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Welcome back. We're chatting with Ted Dixon. Ted, the NAFTA renegotiations are about to get underway. Canada has added to their committee here looking at it Rona Ambrose, who was the interim leader of the Conservatives, and James Moore, who was their industry minister, and we've interviewed James Moore on this program. Is that a good addition to put balance on it and not just have a politically one-sided team looking at this issue?
Well, absolutely. It's a step in the right direction. We really need more bipartisan efforts in Canada, and it's really good to see Ottawa taking that approach. I wouldn't necessarily take a lot of comfort of having a group of politicians involved, regardless of their political stripes. But having at least a broad drawing of different political parties is good. It avoids, it puts a national interest. It signals you're putting the national interest first ahead of your own partisanship, and we really do need a lot more than that, more of that. And we don't need to go to extremes where you can't you've got such a fixation on unity and not offending anyone. You don't do anything, but on efforts of the national interest, like a NAFTA renegotiate, especially, given the stakes with the current protectionist tilt in the U.S., it's really good to see that kind of approach, and, Canadians should be cheered by that. It's a really positive development.
I think we have something like 36 state governors who are very concerned because they realize how important Canada is to their local economies.
Well, we've already had one major victory, and that is the House of Representative leadership has said they're not going to pursue a border adjustment tax. Now, that didn't get a lot of play in the media, but it's certainly good for cross-border Canadian manufacturers, such as auto part makers and aerospace part makers. And, we have a number of those companies in Canada. We have a number of those in our Canadian Insider Index. So that's very positive news that they're not going after a border adjustment tax. So there's a lot to be upbeat about in Canada. And, we're starting to hear a lot of chatter. Well, the dollar's at 80 cents now. It's time to pull back. Well, it probably is time to pull back a little bit now, especially now that you've got the specs who are all selling it short down at 73 or 72 cents or whatever it was, and everyone was piling on the shorts. Now they're getting long. Well, it's probably due for a pullback here to test their mettle. But if Ottawa can pull off a decent NAFTA deal, Canada's still got a lot going for it. And if China is able to continue its momentum with its huge infrastructure plan, Silk Road infrastructure plan, it could be a pretty good setup for the Canadian market over the next few years here. And we're sort of due. We haven't had a good run for a while, and we've got we've got a couple of good indicators that are pointing it's possible. But risks remain high. What if NAFTA doesn't go right? You can have all the bipartisan approach you want. If the U.S. draws a line in the sand and says, we can't have a dispute resolution mechanism in the deal, well, then I don't know where that leaves us, because if you don't have a way to solve disputes in an agreement, what good is your agreement, right?
Well, Trump was quoted, and again, we always have to remember who said this, but Trump says the U.S. doesn't have to worry about Canada on trade. Is that a good sign?
Well, he said that this week, but of course, a month or two ago, he was ranting about dairy and softwood lumber. So, I think you have to take anything he says with a grain of salt. What really matters is what ends up on paper, is signed, sealed, and delivered. And I just wouldn't pay any attention to anything he says at any one moment, unless what will be important with him is what he signs into law. That's what we need to really focus on. And so far, we're making some progress, and having the GOP drop this border adjustment tax idea is a step in the right direction. But we certainly don't want to give up a dispute resolution system under NAFTA, because then we'd be at the mercy of U.S. courts, and that would not be in our interest at all.
We'll have more with Ted Dixon right after this.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ted Dixon. Ted, Petronas has pulled the plug on its massive liquid natural gas development in British Columbia. Is that a vote of non-confidence in the BC economy, or just reflecting the fact that natural gas isn't worth a lot of money right now?
No, I think, it's a reflection. I would put it, 90% natural gas market fundamentals and maybe 10%, we're not so sure about this new government in Victoria, and, given how marginal the business case is, we just don't need the hassle of having to endure that political risk. But on balance, on balance, it's not a great start for the NDP government. But that may in fact help other areas such as mining, because hopefully the NDP will be, mindful of their poor start here, and want to make sure that they don't jeopardize any future resource development projects. So maybe a bit of a blessing in disguise. It was probably going to happen anyway, given the glut of natural gas that's coming onto the market. I say glut, I mean the excess of supply over demand. There's been a lot of rhetoric from the left saying that the BC Liberals, it was all, they were all lying about the demand for LNG and everything. No, they weren't. There is demand for LNG. The demand is growing for LNG. The problem is that there was a shale revolution in the United States that boosted supply more than demand, and it's just not fair to hang that on the BC Liberals, and it just is not fair to hang the whole Petronas decision on the NDP. There's been a lot of factors out of the control of politicians. Jim, believe it or not, politicians only have so much power, and at the end of the day, they can usually tend to make things worse than better. But if you do the right policies, you can set the groundwork for the people of your country to excel, and that's the best you can hope from politicians. But of course, as we saw in the last election, there's always this temptation for politicians to try and bribe you with your own money, get rid of tolls, or give you $5 to help you with your rent, or or help you fix your basement. Right? There's always this kind of race to the bottom in policy making, where politicians want to show, oh yes, I do have some power. I can give you $5, or I can give you $10, or I can help you change your light bulb, in your garage, and that's the kind of politics and policy that really gets you nowhere in the long run. What you need are really good fundamental reforms that go with the time, and the NDP, they have to put this this natural gas decision behind them, but they have to be mindful that, look, they can't afford any major other resource pullbacks that are more squarely laid at their footstep, at their doorstep, because they're going to have to pick up some seats in the interior if they want to have a real majority. They don't have a majority right now. They don't even have the most seats. But there will be an election probably within the next couple of years. So they need to pick up some rural British Columbia seats to win, and you don't do that by putting up roadblocks in front of natural resource industry projects. So it's probably, for the mining industry, they can actually maybe hope that this is going to help them, and that the BC NDP can hopefully learn from that they've got to get they can't be perceived to be standing in the way of resource development, and so the mining industry is probably, in retrospect, probably a bit of a backdoor winner from this decision not to go ahead with this LNG export terminal.
Ted, thank you so much for chatting with us.
Well, it's great to be back, Jim.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. If you have any questions for the show or our guests, you can send them to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.